Hey there, I'm going to make a short video talking a little bit about my thoughts on the market and how I'm playing it right now. I'm doing it in part because I think we're at a very pivotal time, um, but mostly just because I'm procrastinating and I'm trying to delay doing work I need to do. Um, so that should benefit you though. Okay, the first thing I want to say is like there's it's in any investment community or I guess life in general, people are really obsessed with like trying to be right. And for me, what matters, what is correct for you and anyone else is, are you getting your goals met? Are are you setting the right goals that actually are what are making you happy and healthy? First of all, you have to have the goals correct. Uh, and then are you able to meet those goals? And to me, that's what being right is. It's not trying to guess exactly what's going to happen. It's not getting the most money or the highest position or anything like that. It's what is your soul and heart actually calling you to do? Can you translate that into something concrete in terms of goals? And then can you meet those? And that's what success is to me. Now, a lot harder said than done, but or done than said. But ultimately, that's what I aim for, and that's why I'm making these videos. Okay, that out of the way. If you're doing anything in markets, or even not in markets, even if you're just building companies or things like that, I think paying attention to the 200-day moving average in whatever is relevant to your sector is it should be the touch point for everything. And the reason why is because for whatever reason, the 200-day moving average is basically the a simple uh, summary of the general sentiment of the whole market on a relatively, medium to long time frame. There have been, in general, generally speaking, the advice is if the 200-day is moving upwards and the price is above the 200-day, then hold. So, for example, going back here, um, you know, you would get in somewhere around 8,000 and you just keep holding and you keep holding and you keep holding and you keep holding and then you could exit at 40,000, let's say. That's a really good run. You're not getting the top, you're not getting the bottom, but that's a really good run. Um, in fact, and then on the flip side, if it's below the 200, so this whole period here, you either aren't involved in the market or you look for shorting opportunities. Um, and especially if the 200-day is declining, which is getting pretty hard. You have to go really far back um, because the markets are so crazy right now. But in this back here in 2018, you can see that the Bitcoin fell below the 200-day, then it came into resistance here, and then just started like going down and going down and going down and going down. And so you would be out in this, this entire time in the market because the 200 days declining and um, and the price action is like not broken through. Um, so you would have missed all of this drama. You would have been able to get here again, not at the top. Like you're still taking, you're still taking a hit from up here, but you miss most of the drama. Now, they've done studies on the S&P 500 over, you know, decade long period. I think 80 years is the one that I read. And just doing this simple strategy, you get somewhere like 85% of the return as you would buying and holding and never selling. So it's not going to make you outperform, but the important thing is that your drawdown is much, much less. Drawdown is how much you go in the red. Why is that important? Well, it's important for a few reasons. First of all, if you're sitting on cash, you can use that cash to do lots of things. You know, you can get yields in very low risk in investments. You can you can use the time where everyone's freaking out to find the next new opportunities and be able to get into them, you know, basically on the ground or at very steep discounts, and then greatly outperform the market. So, and most importantly, I think to me, psychologically, even if you don't do that, you you miss you miss out on all the fun. You miss out on all waking up, seeing your portfolio going down so much and like grasping for straws and trying, hoping. So that's I think that for everyone, basically using this 200-day strategy is is a great foundation, no matter what style of investor you are. I can get into a lot more detail on how you can become more sophisticated. And if you do some more sophisticated things, actually your returns can be better than the buy and hold strategy with still having very, very low relative drawdown and risk. I'm not going to do that right now. What I'd like to do right now is I'd like to comment where we actually are. So as you can see, the 200-day moving average has basically been flat since all the way back here in mid-July. The price action, in that time, Bitcoin has gone from 30,000 to almost 70,000. And now it's come back down to 46,000. So there's been a lot of chop around here, but it's basically, you know, uh, even going back to earlier this year, there's this chop. It's basically created this flat stretch. What does this mean? This means there is long-term indecision. It means that long-term, potentially over the course of years, future years, people don't know what direction to take. So this is on a fundamental level. They are unsure. We could either boom and hit 200,000, or it could go down. I think my bottom target somewhere around 10,000 to 15,000. Either one of those possibilities, you can totally make a case for. And this flat line that shows that people don't know. There is not the conviction one way or the other, and what they're doing is they're trading and they're taking profits or losses. You know, what I see is that we're at a very critical time right now, because when you see this price action over this many months and you have this flat of a 200-day, it means that when the price comes and tests the 200-day, there is a high probability of a rapid move, either up or down. So as we can see here, there was a big sell-off that very temporarily went through the 200-day, and then there was a reaction rebound. And since then, it's kind of been like gradually going down and down and down and down. And now we still haven't gotten, I guess, uh, actually, let me change to the actual price chart. Um, so, it wasn't until the last few days that we had like closes below the 200. And right now it's sitting right at the 200. As I make this video, it is 50 points away from the 200 below, and it's come up to test it. This means that it's a very uncertain time. You could have, if it holds, we could easily be back up to at least this 50-day up here, 56,000. If it breaks down, it could break down all the way down to 40,000 very, very quickly, and then ultimately 30,000 retest these lows. So that's what I'm seeing in the market right now. Um, and I would like to now say how I am playing that. What am I doing? So because of this long-term uncertainty right now, I am mostly neutral. So I mostly in stables. Um, if the market doesn't know what direction to go, I don't know what direction it's going to go. So I'm not going to make any major bets. However, there are a few projects that I really like for various reasons, and I'll just briefly say what they are. So I really like Asgard. Um, it's an ohm fork, but there's something more behind it. We know that they're making a play to earn game. There's other projects they haven't announced yet. It has like one of the best communities and developers that I've run into, and so I'm really into it for the long term, just for the potential. I may, through sheer luck, I'm a relatively large holder, and so I'm just want to support it. Like I it's something to me that literally, if it takes off, I'll make millions. Um, and if it doesn't, like that's fine. I'm just gonna hold. There's another one, Comb Financial, which I just launched yesterday, and I got into this, and this is like just the node craze. Again, there's something in it that like I think it has there's something else. It's not just a fork. They're doing something. I can see it in the team. I have no idea what it is. Um, I've actually like made some nodes, and generally in these node things, I just trade the price action and make money. For this one, again, I'm like I'm in it. If it doesn't do anything, then fine. Then there's also Spartacus, which is another ohm fork. It is like way, way, way below its risk-free value, as you can see here. Um, and I don't really know where this is going, to be honest. In theory, if I just hold it forever, I should make profit. Um, I think the dev looks very trustworthy. I don't know if it will recover, but I am literally just holding this because I want to test the ohm model. And again, I don't really care if it goes down and to $1 and starts buying back. I just want to see what that's like. And then finally, there's this sand clock um, with the Quartz token, and I'm really excited about this one. Someone showed this to me. Um, this the way that they are pitching this, they're like literally getting financial accreditation and things like that. Um, I think where we are in the industry cycle, and I'm going to make a video about this, we're going to start looking at these managed funds that pop up that do like real actual fund management that will just like blow everyone's socks off. It's not going to have like insane, crazy quote unquote yields, which is actually just inflation, because it's going to be real. And from looking at this, just the little that they released, um, again, it looks like this could be a gigantic thing. Like it could be one of the things that basically ushers in the next wave of DeFi and lines up with my own personal work. So again, I have a chunk of money in here, um, willing to ride it for however long. So all four of these projects, I'm I'm either buy and holding or like like in the node context of Comb, like my money's gone, so I'm just trapped. Um, and so if there is a next major boom, I think that these four projects are going to outperform, or at least just, do as well. It doesn't matter. And so I'm going to make a ton from that if there's a boom. However, if there's a major crash, if we go down to 30,000, or even like I said, 10 or 15,000, then what's going to happen to all these things? Well, they're probably going to get wiped out. Now, I want to be in these things long term. Even if there's a major crash, I think they can eventually recover, and that's why I'm in them. But I don't want to ride it all the way down and just have my whole portfolio turn red. So what have I done? What am I looking at right now? Like what sort of position I'm in? I'm actually going short. I'm going short on Bitcoin in a leveraged position so that if it breaks down, then um, the amount that I make from the short is going to at least cover my losses. And in fact, if it goes down enough, like around the 30, 35 sort of range, which is totally doable, I'll actually probably be in profit. Even if my long-term holds they go down, you know, 50 or 80% or whatever, I'm still in profit as from my hedge. And so what this has done is this is right now I'm in a position where I feel really good. Like if it goes up, great, everyone's happy, I'm really happy. If it collapses, if it goes down, you know, I should at least break even, and then I can just like stay in that position and not worry. If it starts going down a lot and the whole market starts to turn, then I will wait for entry points and start playing for the bear market in general, start looking to make profit off of it going down, not just using it as a hedge. I'll take a bunch of the cash that I have on the sideline right now and start doing positions where I will make money from it going down. Similarly, if it has a big bounce up, shows that it's reestablishing the bull market, then I will wait for good entry points, take that cash, start looking to make more as it goes up. I hope this is clear. Like I'm basically at a position where I don't care. Part of me wants the market to collapse, to be honest, because I love making tons of money when when things are collapsing, and then being able to find new opportunities. I think it's very healthy. I don't think where we're at right now is healthy because most of the value I see is going to projects that I think are unsustainable. Um, but if it does go up, I'll be in a great position. So I may or may not talk about the specifics of how I actually am doing my short, like how I decided the entry, where my targets are, things like that. This video is already much longer than I anticipated. Um, but I just wanted to get it out there. I just wanted to get out that you can be a holder. You can you can have opinions on things, and you can also be position yourself pretty easily so you can uh, have security or even win greatly no matter what happens. And the key is why can you set that position right now? The key is because we're at this point of maximum indecision. And at this point of maximum indecision, it makes it very likely that when a direction is picked, then then it will be a very rapid move and most likely establish a long-term, in crypto space, a few months, trend. If you're trying to you know, in the middle, on some of these parts, it can be much harder to find good hedges. But right now, excellent time to hedge. All right, that's it. And as always, leave comments or message me or anything like that. Thank you.